Welcome back to the deep dive. Okay, today we are really digging into a move that's certainly been lighting up the strategy discussions this week. Aifex, that's AFX, and their, let's call it, strategic decision to list their token on the All InX exchange. And our mission here, it's very specific. We're looking past the simple headline. This is about dissecting the strategy. You know, putting on our global crypto strategist hats to really understand the master plan, the vision behind Aifex's global expansion play here. What's the real chess move?
Well, when you look at all the source material together, the picture that emerges, it's really one of highly calculated execution. This listing, it's not just about generating some short-term buzz. It feels like step two in a very deliberate, staged expansion. The goal seems to be generating verifiable institutional-level demand and securing that global market legitimacy for AFX. So we're really looking at this as a blueprint for, let's say, accelerated market entry.
Okay, that immediately brings up the big strategic question, doesn't it? Why all in X? I mean, if the ultimate goal is global reach, why not just aim straight for a tier one exchange right out of the gate? Why pick a non-tier one platform for this critical first step? Let's try and unpack the thinking there.
Right, and the answer really comes down to a key strategic bottleneck AFX was facing. Before this, their main liquidity pool was over on PancakeSwap, a day X. Now that's great for initial community building, sure, but staying only there really kind of limits growth potential.
And it's a serious limitation, right? Just relying on DeFi wallets means you're cutting off a huge segment of potential buyers. We're talking high slippage risk because the liquidity just isn't deep enough sometimes.
Yeah.
And that automatically puts off, the serious quant funds, the bigger institutional players who need to execute larger trades without moving the price drastically.
Exactly. So the All InX move is, well, quite clever because it acts as an immediate shortcut to CEX, as some of the sources put it. All InX uses this specific model, the Vote 2 list, combined with an alpha spot zone. And what that does, essentially, is it drastically cuts down the cost, the resources, and the time needed compared to trying to meet, frankly, very demanding requirements of Binance or an OKX. So it lets AFX get access to millions of centralized exchange users almost overnight. It's an accelerator.
It seems highly pragmatic, yeah. They're not trying to take the whole castle at once. They're establishing a solid beachhead first. And this really highlights what the sources are calling the stairway strategy, which I find fascinating.
It is fascinating, mainly because of how methodical it appears. The immediate aim isn't just, a quick price jump. It's about validating key performance indicators, or KPIs. AFX seems to be using this mid-tier CEX like a proving ground, generating real verifiable data points, things like consistent new user numbers, stable trading volume, and importantly, smooth, reliable deposit and withdrawal stats.
Okay, and why is getting that validation so absolutely critical at this stage?
Because once you have those metrics, confirmed and stable on All InX, they stop being just projections on a slide deck. They become hard, verifiable market data. And that data becomes your single most powerful bargaining chip when you eventually knock on the doors of the Tier 1 exchanges. It shifts the conversation completely from, hey, trust us, we have a great community, to, look, here's the audited proof of the users and volume we consistently deliver. It fundamentally de-risks the lifting decision for those big players.
That makes sense. And this structural approach, it ties directly back into Aifex's bigger picture, right? Their long-term roadmap includes building their own AI-powered centralized exchange. You simply can't launch a major global CEX if your core utility token doesn't already have proven deep liquidity and market stability on other centralized platforms. So this all-in-X step feels like a necessary foundation for that much larger long-term ambition.
Okay, so the high-level strategy is the stairway. Let's drill down into the tactical advantages. What does this move unlock immediately, say, in terms of the quality of liquidity?
This is where you see really fundamental shift in market structure. By moving from the, let's say, asynchronous world of a DEX onto a live CEX order book, they instantly become attractive to a whole different class of participant. We're talking about the professional market makers, the institutional quant funds, the high-frequency trading, or HFT bots. These are the players who provide serious, deep liquidity.
And having that professional infrastructure in place, that's really the bedrock for building wider investor confidence, isn't it? Absolutely. It helps organize the bid-ask spread, it dramatically deepens the order book depth, and it ensures much faster, more efficient price discovery. For the average user, what this means is significantly less slippage when they trade and just more confidence that their orders will execute fairly. It signals a transition, really, from maybe a volatile community project token to a more serious financial asset.
I also find the narrative alignment quite interesting here. All InX seems to have deliberately cultivated a specific brand image focusing on being community-driven, highlighting staking, their Nexus tech, real-world assets.
Right, and that meshes almost perfectly with Aifeex's own positioning around AI DeFi.
Hmm.
So by listing there, they're not just potentially sharing users, they're actively reinforcing each other's stories, their unique value propositions in the market. It's like a mutually beneficial marketing echo chamber in a good way.
Okay, but let me push back a bit there. Isn't community-driven something almost every mid-tier exchange claims? How do we actually know this synergy is, real and not just convenient marketing speak?
That's a fair challenge. And I think the proof, or at least the indicator, lies in how the Vote to List mechanism itself works. That campaign, it's more than just a way to get onto the exchange. It functions as a really cost-effective marketing engine. It drives genuine user-generated content. It gets the existing community deeply involved. And crucially, it identifies and gathers a warm audience, people who've already shown interest and commitment before trading even starts. That significantly boosts the chances of hitting the ground running with real activity on day one. That's the measurable synergy you look for.
And hitting the ground running is vital because we always need to consider the demand side of the equation. We know AFX still has that ongoing supply pressure from its daily token unlocks, right? Over a 100-day period.
Correct. That's the elephant in the room, strategically speaking. Without a significant corresponding wave of new demand, that steady drip of new supply hitting the market will inevitably put downward pressure on the price. So the CE's listing is absolutely essential because it opens the floodgates potentially to that mass retail audience and institutional players who might have previously stayed away from DeFi due to wallet complexities or security concerns. It creates the potential counter demand needed to absorb the new supply, stabilize the price, and ideally allow for appreciation over time.
Okay, let's pivot now to something equally important, the strategic cautions, the risk management side. Because let's be honest, achieving stable market conditions is tough, and just getting listed, especially on a mid-tier exchange, is absolutely no guarantee of success.
Exactly. We have to be very clear about the scale reality here. All InX, while a smart strategic choice for this stage, isn't a Tier 1 exchange. So investors really need to manage their expectations about some huge immediate price explosion. The initial user base and the liquidity depth might be more limited compared to the giants like Binance or Coinbase. This means volatility could still be a factor, especially in the early days.
And that supply pressure you mentioned, it doesn't just disappear with the listing.
Not at all. That 100-day unlock schedule is still running in the background. It remains a significant risk factor. Even if the listing itself is technically successful and generates buzz, the price could still face headwinds if the market making isn't robust enough to effectively absorb that daily influx of new tokens.
Which brings us to probably the most crucial point, the one that really separates, amateur enthusiasm from professional strategy. A listing is never the finish line. The sources are quite emphatic about this. A listing doesn't automatically mean the price goes up.
Absolutely not. Success hinges entirely on the execution after that initial listing excitement fades. Our analysis points to three critical non-negotiable factors. One, the quality and depth of the initial liquidity seeded into the order book. Two, the effectiveness and commitment of the professional market-making package they deploy. And three, a sustained, continuous plan for communication and project activity post-listing. If they drop the ball on any of those, the momentum can evaporate very quickly, no matter how strong the initial community push was.
Okay, so if we were putting together an operational excellence checklist for Aifex, what are the absolute must-dos? What do they need to nail in the immediate lead-up and right after listing for this move to be deemed a true success for their long-term strategic vision?
All right, first up, seeding the market perfectly. This means providing enough initial orders and liquidity, not just at the starting price, but across multiple levels of the order book ladder to achieve specific, tight bid-ask spreads. Professionals need to see a solid foundation. A thin, gappy book is a red flag.
And that initial liquidity needs active management, right? Not just set it and forget it.
Precisely. Which leads to point two, strict service-level agreements, SLAs, with their chosen market makers.
Right.
These need to define clear goals for things like maximum allowable spreads, required uptime percentages, and crucially, mechanisms for continuous rebalancing of liquidity between PancakeSwap and All InX to maintain price consistency and prevent arbitrage gaps.
Makes sense. Keep the markets efficient. What else?
Then comes the communication piece, the long game. They need a dedicated 14 to 30-day communication plan ready to roll out immediately post-listing, and the focus must shift. It needs to be all about the ongoing AI DeFi utility of AFX, showcasing real use cases, new features, partnerships, rather than letting the narrative get stuck purely on day-to-day price action. That's how you build perceived value over time.
And underpinning all of that is trust.
Exactly. The final piece is institutionalizing transparency. Setting up an ongoing transparency portal, maybe with live, on-chain dashboards tracking key metrics, regular progress reports is vital. It proactively tackles potential FUD, fear, uncertainty, and doubt, and projects an image of professionalism and long-term accountability to the entire community and potential larger investors.
Okay, excellent breakdown. Now, let's shift the focus directly to you, the listener. If you're tracking this AFX move, what's the smart way to approach it? What actionable steps, based on the strategic analysis, should be on your personal checklist?
Right. This is about empowering yourself with a professional approach. First, and most importantly, patience. Absolute patience. Wait for the official confirmed announcement from Aifex and All InX about the exact trading pair like AFX USDT or whatever it might be, the precise go live time, and the official exchange link. Don't act on rumors or speculation. That's how mistakes happen.
Solid advice. What's next? Verify, don't trust.
Exactly. Test the plumbing before you commit significant capital. Use a very small, almost insignificant amount of money first. Go through the whole process. Deposit that small amount onto All InX. Try making a tiny purchase of AFX. And then, this is key, immediately try to withdraw back to your own wallet. This confirms the actual workflow, checks for any hidden fees or delays, and verify the exchange is functioning smoothly under real conditions.
Okay, so verify the mechanics. Then, on launch day itself.
On launch day, your primary job isn't necessarily to trade frantically, it's to analyze. Focus your attention squarely on the live order book. What are you looking for? Check the bid-ask spread. Is it tight or wide? Look at the depth, how many orders are stacked up at the prices near the current market price. Observe the trading volume in those first few price channels. This tells you almost instantly whether the project and its market makers have actually deployed the necessary liquidity effectively.
And remembering that 100-day unlock window we keep mentioning.
Yes, that dictates a cautious money management approach. Professional strategy would strongly suggest using dollar cost averaging, DCA, if you decide to build a position. Don't chase potentially volatile opening price spikes. Factor that ongoing supply risk into your accumulation timeline. Spreading your entries over time is generally much wiser here.
And the final, universal rule.
Have an exit strategy before you enter, always. Define your plan in advance. At what price level would you take profits? What's your stop-loss point if the trade goes against you? This needs to align with your personal risk tolerance and overall portfolio strategy. Don't make emotional decisions in the heat of the moment.
Okay, so wrapping this all up, our analysis really underscores that this AFX listing on All InX isn't just some minor operational update. It feels like a very deliberate, calculated move, an opening of the CEX door, if you will. It's designed to translate that decentralized community energy into verifiable, stable, professional-grade order book liquidity and tangible usage metrics.
And ultimately, it's those metrics that will determine what happens next. If Aifex executes this post-listing phase, with discipline meaning robust market making, sustained communication focused on utility, and operational transparency, then the positive outcome isn't just about short-term price action. It's about successfully building the long-term institutional credibility they absolutely need to take the next step up that CEX ladder towards the Tier 1 exchanges. They're clearly playing a multi-stage game here, and the stakes are high.
Absolutely. A very strategic, long-term play unfolding. So, considering this multi-stage approach and the clear goal of eventually reaching a Tier 1 exchange, here's a final thought for you to consider. Beyond just trading volume, what do you think is the single most critical KPI, that key performance indicator that AFX absolutely must demonstrate on All InX to truly capture the serious attention and guarantee the interest of a major Tier 1 platform? Something to mull over after this deep dive.